If that's right, you could be talking about a gold price that was $7,000 or $8,000 or $9,000 or $10,000. Am I saying gold is going to go to $10,000? No. But I'm saying that there is a strong enough possibility of it, and the consequences of that for you maintaining your lifestyle with a US dollar denominated balance sheet would be very unpleasant. So I think that people who are concerned about those things need to own gold.
Gold stands out as a traditional store of value and a stable hedge against the depreciating U.S. dollar amid global economic uncertainties. Experts like Rick Rule advocate for gold ownership to protect wealth against inflation and geopolitical risks. In today's episode, Rick also covers the Chinese situation. China, recognizing gold's potential as a safeguard, encourages its citizens to invest in it, and recent central bank purchases reflect a shift from the U.S. dollar due to geopolitical tensions. Central banks, especially in China, India, and Russia, drive the surge in gold demand as they seek a secure asset amidst global financial uncertainties. Rick Rule also emphasizes gold's strategic importance in a diversified portfolio, noting its value as a safeguard against financial instability, especially in uncertain times. Now we'll show you the best clips of the latest interview, but first, hit the like button, smash the subscribe button, and turn on notifications. Actually, smash everything but my spouse. Ha ha. Enjoy the episode.
Gold is, I think, for the Chinese central banks and for many other central banks, fulfilling its traditional role, both as a medium of exchange and as a store of value. Imagine if you were the Chinese and you ended up with several trillion rubles and you didn't have the ability to spend on anything from Russia. When it was efficacious for them to denominate their trade in US dollars, they did it, and they did it comfortably for years, and they were for years the largest holders of US treasuries. The relationship between the US government and the Chinese government now probably leaves the Chinese no choice but to reduce their holdings of US treasuries and substitute gold for that asset class. The recent strength in gold, and by recent I mean the last 2 years, has been more a function of central bank buying than retail buying, even in China. The Chinese market, and to a lesser extent the Indian market, has seen more retail buying than the US market, which has in fact seen retail selling. But the statistics would suggest that the buyers of gold in real size have been foreign central banks, reacting, I suspect, by the US government's attempt to weaponize the US dollar, whether it is seizing $300 billion worth of Russian holdings of US Treasury securities, which should make any country that holds its wealth in U.S. treasuries concerned, or the weaponization of the SWIFT banking system by the U.S. To reinforce sanctions. Whether or not, as an American, you agree with those policies or not, they're disquieting to foreign central banks who have suddenly come to understand that denominating all of their foreign currency transactions and their national savings in US dollars and US Treasury securities is not a good thing. With regards to the difference between Chinese buying, that is Chinese retail buying, and US retail buying, the Chinese government has an official policy of encouraging their savers to save, among other things, in gold. Which is to say that they have facilitated gold transactions and encouraged it after a policy many years ago of making it illegal. So there's probably an awful lot of pent-up demand in China, which is also facilitated by the Chinese government. And as you say, the weakness in the renminbi has meant that while gold has done well in US dollars, it's done very, very, very well in renminbi. If retail buying in Western Europe and North America begins to follow through on top of central bank buying, all of us around the gold community looked at who the former buyer of gold was when gold was strong. which is to say individual savers. This is really a new phenomenon for us, to have the market being led by institutions. We all thought that gold was the anti-institution instrument, but it's strange to see the strength in gold led by institution with thus far very little retail follow through. If you layer retail follow through on top of this institutional strength, because both constituencies have an interest in gold, I think you could see a very, very interesting move.
In today's market recap, silver price plunges over 3% back beneath $27. Silver drops to 26.29 amid a strengthening U.S. dollar and rising Treasury yields, influenced by higher employment costs. Technical support is identified near $26.12. A rebound above $27 could set the stage for silver to target the recent high of $27 and challenge the $28 resistance level. Silver's price dropped sharply late in the North American session as the greenback staged a comeback bolstered by the rise in U.S. Treasury yields. The rise in the U.S. Employment Cost Index, ECI, reignited talks that the Federal Reserve might delay its rate cuts due to inflation pressures. If silver recovers and edges back above the $27, that could open the door to retesting higher prices. Subsequent gains are seen above the April 26 high at $27.73. Now we'll show you the best clips of the latest interview. Make sure you watch the video to the end to make the most out of it. Enjoy the episode.
In constant dollars, that gold would have to break out above 2,700 to get to new real highs. It's interesting that when people talk about money, they don't talk about money in terms of the constant. And when you talk about gold, you are talking about the constant. So my suggestion would be for gold to take out the old highs, which I think it will do, it would have to go through 2,700. But your bigger point is more important. For me, gold isn't a trading vehicle. For me, gold is a store of wealth, a medium of exchange, liquidity, and insurance. And I own gold because I'm afraid of our incomprehensible debt levels. I own gold because the interest expense of the U.S. government is, I think, and I say the U.S. government, but I could just as well say the EU or Canada, is going to overwhelm our ability to sustain it. I'm old enough, Daniela, that I remember the decade of the 70s. We dealt with it by inflating away the purchasing power of the instrument that the debt was denominated in. Over the course of the decade of the 1980s, the purchasing power, constant purchasing power of the US dollar declined by 80%. I think that sort of thing is precisely what's on offer now. If that's right, and I believe it's right, if that's right, you could be talking about a gold price that was $7,000 or $8,000 or $9,000 or $10,000. Am I saying gold is going to go to $10,000? No. But I'm saying that there is a strong enough possibility of it, and the consequences of that for you maintaining your lifestyle with a US dollar denominated balance sheet would be very unpleasant. So I think that people who are concerned about those things need to own gold. And I think that message circulates well. And I think for better or worse, the gold price goes higher and perhaps much higher. There was so much hate around the silver stocks, probably as a consequence of their fail during the 2020 and 2021 silver squeeze. I like to say there's no hate more sincere than the hate of a jilted lover. And silver and the silver stocks certainly built up a lot of jilted lovers, young jilted lovers, particularly passionate ones in 2020 and 2021. The consequence of that is that the silver stocks got way, way oversold. In my career, that's happened 3 times before, and I'd adore to see it happen again. I own gold, or physical bullion, I guess, is insurance. I own the silver stocks as a speculator, and describing them as coiled springs, I think is really accurate. There is not enough market cap in the legitimate silver stock space to handle the capital that will come into the space if the generalist investor buys into that narrative. I've seen that happen before. I remember the early part of the decade of the 90s, that move in silver, when things like Pan American silver went from 50 cents to $45, Silver Standard from 72 cents to $45. I'm not saying it's going to happen again, but I'd sure like to be part of it if it does. In terms of debt per capita, including federal and provincial debt, and in terms of government debt and government expenditure as a percentage of the GDP, Canada's in worse condition. And in Canadian parlance, a substantial part of that is what Canadians would call an own goal, which is to say that the government, particularly the government's deliberate checking out of the oil and gas industry, the industry that is Canada's most competitive industry, is an absurdity. The Prime Minister has stated that there's no business case for Canadian natural gas backing out coal in world markets. All of Canada's major trading partners, the Chinese, the Germans, the Americans, have all said that they would love to increase the utilization of Canadian natural gas. I guess the reason that the Prime Minister suggests that there's no business case is that there can't be a business case if he won't allow it. But the idea that you maintain the level of social expenditure in Canada with debt, with interest levels that are consistently higher than the United States, in the absence of any economic growth, is a real challenge. So the idea that you raise capital gains taxes, as an example, penalizing the relative few and not the many, plays well in Canada. The problem with it is it doesn't work.
Do you like Rick Rule's idea of marking the portfolio to gold? Are you still valuing your net worth in dollars? Have you learned something in today's episode? Post in the comment section down below your insights on the matter and watch this video right here because it's a perfect fit for you. I see you on the other side.